All right, folks, good evening from Paris. I am traveling, so it's going to be a quick, brief video discussing how did I catch this move, this massive, explosive move. A lot of you and most of crypto Twitter got wrecked shorting down here, right? But why did I buy? And those who follow me for a while know that I've been catching moves like this across all markets, crypto, FX, the index futures, for the past year consistently, because that's all that matters. It doesn't matter, and I don't care if you can catch the move once in a while, right? It's irrelevant. Can you do the same thing week in, week out, day in, day out? If the answer is no, then you are not impressive to me, right? Because consistency is what will keep you alive in this game long term, right? So that aside, the move I'm talking about is buying down here, right? Right before the massive explosion in price. How? Am I a soothsayer? Am I a magician? Am I a market maker? Do I have friends that are market makers? Maybe, but the answer over here is going to be a technical answer, right? So we have to understand that the markets move in trends and then ranges, and then trends and then ranges, right? So the market moves in a range, and then a trend, and then a consolidation, and then an expansion, and then a range, and then perhaps it tops out, and then it trends in the opposite direction, right? Why? Because if the markets moved simply up and down all the time, then everyone will make money, right? It has to chop people out and take them out of their positions before going a certain direction, right? And that's what happened here. So the markets move in trends and ranges, right? So when I saw this formation of this 4-hour range, and I will use the replay for this one, it is hindsight now, but my count says otherwise. Right, so the formation of a range on the 4-hour, which means there's a bunch of chop. What does that mean? That means there is a generation of interest on both the buy side and the sell side, right? When this happens, then you expect a sweep of one side to take you to the 50% of the range, and then the other side, right? And that's what happened. So the market makers are generating interest on both sides of the range. One side is purged, and it takes you to 50%, and then the opposing end. And that's what happened. Now, I was expecting this to be a topping range. However, when I saw them rejecting the low, right? So we go to the range low, and they refused to close below it. Then my eyes open for some bullishness, right? And the criteria, I'll tell you right now. Double top pattern traders are looking at this chart. Double top. They're waiting for a neckline break. They have all their shorts down here, waiting for this to happen. Neckline, and then a further decline, right? But that's not what happened at all. In fact, the most explosive price moves I find come from failed patterns, right? In this instance, what I did was I waited for the range to formed, rejected the high. So we've taken out all the breakout buyers, right? And those who had their stop loss set at this previous high. So the sellers and the buyers have been taken out. And down here, the opposite has happened. And now they're refusing to close below the range low, which indicates bullishness, right? So what I'm waiting for is midnight Monday, because that's when the true week open is. That's when the weekly open forms the higher the low. Starting from there on, I wait for a dump, and they gave me a beautiful market structure shift on the 1 hour time frame. Right? Now, if I show this to you as a pattern, then you probably are expecting a sell, right? And by itself, it's valid. All of these clowns, quote unquote mentors on Twitter, for them, this is a valid pattern. High, low, higher high, lower low, and the order flow has shifted, but they are wrong. Why? Because of the rule I've made, and I've made famous on Twitter, which is a lower time frame market structure shift is less relevant than a higher time frame PD array. And in this case, the higher time frame PD array was the 4 hour order block. Now, before continuing further, pause and answer the question to yourself. What are the criteria for a high probability order block? Number one, it is a thick candle. Number two, it dug into a previous low. And number three, it has an FVG, which indicates displacement above this candle, right? Excuse me. So what we have here is a 4 hour order block, bullish. We have a thick down close candle and a thick up close or bearish. A thick down close candle. So that's number one. Tick. We have this thick down close candle stabbing into a previous low, the range low. Another tick. So it's almost complete. What's missing is an FVG, and we happen to have that as well. FVG over here. So bearing this in mind, this specific candle is the one they will stab into before sending price higher, right? I'm not looking at a zone. I'm looking at one specific candle, right? This one candle is all I care about. So what happened was, after midnight Monday, they stabbed into a thick down close candle on the higher time frame, but on the lower time frame, there's a bearish market structure shift. The answer is fade this pattern. And fade the liquidity of all the clowns with their stop above here, right? So I was max buying down here, especially that happened at the end of London at 5 a.m. Right? So lower time frame, 1 hour, is a bearish market structure shift, stabbing into a higher time frame key level on the 4 hour. And this is when the rule comes in play. A lower time frame market structure shift is less relevant, I'd say even irrelevant, in front of a higher time frame key level. Also, premium bullish market structure shifts are to be faded, and discount bearish market structure shifts are to be faded. Right? This is a discount bearish shift, faded. It's tapping into a key level, right? So there was no other way for price to go except flying higher. This is a massive move. Even though I was expecting a topping range over here, but when the market shows me an opposing intention to my bias, I simply take it. Right? And that gave birth into the execution of this beautiful trade. And one thing you want to see is perhaps a bit of consolidation below the fake market structure shift and then an explosion. All right, the stop loss is going to be for the provisional idea, it's going to be below the 4-hour specific candle targeting, below the specific candle targeting the range high, right, and beyond. So it doesn't matter what you think is going to happen. Trade what you see, not what you want to see. Trade the market, not what you want the market to do. Right? I hope you found that insightful. I'm off to the gym now. Good luck. Good trading.